Welcome to Tech Genius Hub. Today, we're diving into algorithmic trading, a fascinating facet of modern finance where speed and data reign supreme. Let's unpack what it is, how it works, and why it's transforming trading floors worldwide. Algorithmic trading, or algo trading, uses computer algorithms to execute trades at high speeds based on predefined criteria. From moving averages to complex predictive models, these algorithms can analyze market data in real time to make lightning-fast decisions. Algo trading offers precision, speed, and efficiency. It minimizes human error, executes trades at the best possible prices, and can manage multiple accounts and strategies simultaneously. Dive into 4 popular algo trading strategies. Momentum strategies catch trends. Mean reversion strategies bet on price corrections. Pair trading exploits the relationship between two securities. Volume-weighted average price, VWAP, aims for optimal trade prices. Algorithmic trading isn't just for hedge funds. Retail investors are now accessing these tools, but it's vital to understand the risks and complexities involved, including potential for rapid losses and the need for sophisticated risk management. Algorithmic trading is reshaping finance, offering opportunities for those who can navigate its complexities. Whether you're an investor, a trader, or just curious about finance, understanding algo trading is essential in the digital age. Thanks for joining us at Tech Genius Hub. If you found this introduction helpful, hit like, subscribe, and share your thoughts below. Stay tuned for more insights into the tech that powers our world.